Hi everyone and welcome from Andrea Unger. Today we will try with the software developed internally here at Unger Academy to continue what we started a few weeks ago with the stocks, the American stocks, and in particular we will test a very simple composite momentum strategy that is based on monthly rotation of the portfolio, and this strategy basically considers different periods of times, and then it creates a composite momentum to decide which stocks to buy or not, and which not to be both. But this is not the main point of today's topic, because I tried to do a bit different test, and in particular I will allow the platform to choose automatically which is the benchmark from which the stocks should be taken into account. So I have the possibility here to just choose a set of rules so that the platform will decide automatically which is the benchmark, so which is the basket of shares to be taken into account. So in particular here I will consider three different baskets. The first one is the Nasdaq 100, the second one is the Russell 2000, and the third one is just the SP 500. So at every rotational day or every rebalance day, I will just calculate which one of those indices is the best or the worst one, and according to the test rule, I will then decide from which basket these stocks or shares will be taken. I remember you that I'm doing it on a monthly basis, and in particular we will do that on the last Saturday of every month. Just to have a comparison, the same basic strategy applied on the Nasdaq 100 gives very impressive results. And here we can see that on the Nasdaq 100 we would get 27.68% as CAGR, so as compounded annual growth rate, but with a very high drawdown that is close to 50%. The same strategy applied on the on the Dow Jones Industrial 30 Index would give a pretty nice result. But of course, here we can see that the CAGR would be significantly lower if compared to the one we would get on the Nasdaq with a similar drawdown. So this strategy is basically good because it overperforms the benchmark, but is not exceptional if compared to others. So just keep that in mind. By the way, the first test we will do will be with the same strategy, but as said, we will let, in this case, the platform to decide which is the best basket to take into account, so from which to take the shares, to choose the shares. And as said previously, we will do that on the SP 500, the Nasdaq 100, and the Russell 2000. And these are the results. As you can see here, the shape of the equity is not bad at all, but in the very last part, I'm seeing something not so exceptional or not good. And we can clearly see here that the drawdown is similar to the previous one, so we have already seen, but the compounded annual growth rate is significantly lower if compared to the one we would get just considering the Nasdaq. And we can do the same, but choosing the worst index to determine which basket we will consider for the stock picking. And here we have the results. We can see here that the shape of the equity is almost flat at the beginning, and the drawdown is extremely high. In this case we are talking about 67%, And the CAGR is not bad, it's interesting of course, but it's also in this case significantly lower if compared to the one on the Nasdaq. And I don't like the shape of the equity in this case, because most of the profits seems to be concentrated on the very last part, and we have very long periods with bad shapes equity in general, so like here or like here in general.